Hello, folks, and thank you for joining us for today's episode of Trade the Chain. It is July 18th. I'm joined here along with Doug, the Everyday Man DeRosa. That's his official new nickname here at Trade the Chain, because Doug's real expertise is telling you how the economy affects the everyday guy. So, we have a lot to unpack here. I was actually doing background for today's two topics, and the complexity of what's happening, along with trying to feel out the truths and the falsehoods of what's going on is crazy. It's mind-boggling. But today is two things. One, we're going to talk about the ETH merge, and that's because everybody, unless you're living under a rock, saw ETH skyrocket, pump at the end of the weekend into today. And then also as well, we're going to go and discuss Celsius. Today's their first day in court. It's an interesting one. We'll see what they have to say. I find it particularly interesting because they're sharing bankruptcy law firms with Voyager. So, the similarities between their process here is going to be pretty interesting to look at. I've said that word too many times. Doug, how are you today?
I'm doing well. It's a Monday.
It is a Monday.
Yeah.
It is a Monday. Both Bitcoin and Ethereum up today. Here's a chart. Here's the DXY chart. By the way, Nick is off today. He did do the daily over at Trade the Chain. So if you missed that, hop on over there. It's available for replay now. And you can see from the DXY chart how we were hitting those lows on Bitcoin right here over on the 14th. We've said it over and over again that the DXY is notorious for trading inversely to Bitcoin price. So it's been pretty easy to scalp trade depending on the DXY strength. And of course, we saw the dollar lose. Actually, we saw the euro lose its value to the dollar and reverse there for a couple days, 99 cents to the dollar. So interesting times. We saw a steep dive in the DXY going down. That's when we saw let's see here. The Bitcoin, we saw the price of Bitcoin go up. We also saw sentiment reverse and go into the positive here. We're now seeing DXY go back up. And if you look at the charts, you're also seeing that Bitcoin has had a few very bearish candles down in the last hour. So we're going to keep an eye on that. This is the number to look at. What do you think of that, Doug? Does that make you feel better these days, seeing it over $1 trillion?
It does. I mean, obviously, people are trying to figure out where are we at now? Is there a bottom formed? Are we at a bottom? Obviously, just like a top, you don't really know it's the top until a couple months later, right? And we won't really know if we're at a bottom to a couple months later. But you look at the charts, I think we're obviously at a 3-month high now in ETH. I don't know if BTC is at a 3-month high, but clearly the line on the sand on ETH is 1252. It was struggling in that area more or less in the 1240s, 1250s. So anything below that is basically, I would guess, you're short. And from here you're long. And on BTC, it looked like 21 and a half, more or less. But yeah, the altcoins obviously will follow. Things are a little bit healthier. Is the macro environment still crap? Yeah. But again, that's what we talked about before, where the market and the market economy are different than the market at times. And that's what we're starting to see, not only in equities, but in the crypto markets.
Very well said. Yeah, as you can see up here, it's still market neutral on the overall crypto market sentiment, but we do have Bitcoin at 79 and we have Ethereum at 86, still pumping. Depending on where DXY goes, I will probably guess that we'll see those recede a little bit on the loss of strength of the dollar. So here we have the broader markets, a lot of red in the short term, as you can see from the 1-hour price charts. Let's see what's going on with the bullish sector. Here we go. We got OMG very bullish on the daily curve. Polygon. I mean, Matic's had quite the ride. If you look at the 7-day, 55% up in the green, 163 for the 30-day. So really has been a turnaround for Matic right now. but we still have long-term in the bearish for these top contenders on the daily. Here we see Bitcoin sentiment going up on the daily. We see the price action reflecting it. If you go to the 1 day, we have, there we go. So interesting times. We'll see what happens. I know it's a lot. It's actually really confusing. So speaking to a lot of traders this morning, particularly those who sat on their hands over the weekend, not knowing where the market was going to go. And obviously, I think a lot of them would have made a wrong decision if they had a 50-50 guess, because there's a lot of bearish sentiment among traders. So it was good that they sat on their hands. But it's still confusing. Here we got a comment for Phoenix. The ETH 4 hours pulling back hard. Yes, it is. All the candles are pulling back hard on ETH right now. So it'll be interesting. But one of the things, Doug, that is on everybody's mind coming up is the merge with ETH. Correct. And so we're just gonna do a brief explanation. I will drop the links here into the chat so everybody can take a look for themselves. But if you don't know what the merge is, it's basically Ethereum going from a proof of work to a proof of stake protocol. And why is this important? Let's show it up. Why is this important? Because it's actually the Ethereum being the second largest blockchain out there. It's a huge undertaking. So there's a lot of things that go with it, as far as what Doug is going to dive into in a little bit with ESG and stuff like that. But it's a complex multi-step process, and no blockchain of this scale has ever seen it before. It's huge. So I encourage you to read it. I dropped the link in there if you don't know what it is. And here's a good thing. So some people are saying the ETH trade is in because it was tweeted that it's going to come around September 19th. And September 19th, we all famously know that ETH is completely off with their promises of dates, but this one is really holding true to that time frame in September. This is going to be the second part of a three-parts major process. So there's three major parts in the merge. There's a lot of little test nets in between. The first was the beacon chain. This went into effect on December 20th. I can barely remember when it went into effect, because that's like 10 years in crypto. But the merge will be the second, and then the final phase, which is the sharding phase, which is basically going to solve for problems that everybody's complained about over the last couple of years, which is congestion on the chain, the high fees that everybody is paying, and the ability to allow for scaling in the Ethereum network. Now, one of the interesting things is that for the last 2.5 months, I've been doing swap trades and only getting gas fees from $5, $6, all the way down to 70, 80 cents. I was speaking to a trader this morning, and he was like, hey, I just paid $50 to pay for a conference ticket in Ethereum gas fees. Why? Because we had a lot of congestion with the pump going on. I mean, inflated the price. But this is what's going to solve it, and people are looking very bearishly at L2s because of this. So we'll see what happens. Anyway, you have the report. I want to go to you, Doug. I want you to explain what we've been talking about offline to the folks and how this affects the everyday person and economy.
Yeah, I mean, just first off with the energy aspect, right? I mean, it's purported, there's a good word, that it's going to lower the current energy usage to about a 99%, going from proof of work to proof of stake. I mean, again, the guy in the street wouldn't know proof of work from proof of stake from proof of purchase, right? Or proof of anything else. But he does get that, there's climate change, global warming, whatever you want to hear it, right? And that is a game changer for us. We're seeing that currently in Europe, right? Look at the crazy temperatures in London and Rome right now. So people obviously are conscious about that. And if this can go in a better direction for that, that's certainly going to open up a bunch of new investors, institutional investors that have been ESG focused. They've been the drivers of of a lot of different, obviously, offerings out there. And so now that'll bring in some new buyers into the ETH space. So, I mean, they say currently right now with proof of work, it uses the same electricity on a yearly basis as the country of Switzerland, I believe it is. So if we can save any of that and be more obviously pro environment, obviously that's going to be a great for obviously the merge whenever it does happen. And in terms of, you know, kind of the everyday thing, you look at the internet and how that's transformed everyday life. Again, forgetting about whether it's proof of stake, proof of work, you know, going forward, if you believe in this technology, blockchain technology, and like you said, ETH is the second biggest in this space, right? How does that transform the guy in the street? You know, in my opinion, it's going to be NFTs, right? Every CPG consumer brand is going to have some type of underlying NFT where people will get some form of utility. You know, it's brand stickiness, brand awareness. And who is the leader right now, right? And it's ETH, right? Their biggest. Solana is probably second. Avalanche is third. But ETH has OpenSea, which is basically the biggest name in the space, MetaMask, and obviously that's how you got to go about the process of minting one. MetaMask has about 20 million users. So if you believe in blockchain, if you believe what all these people say that this technology will transform our world, you know, then obviously ETH makes sense going forward, especially if you think NFTs are the angle, and obviously ETH is the leader in that space. So,
well said. So going back to the trade here, we have, let's see, proof of work consensus. I always like highlighting my stuff. So ETH is one of the things that I wanted to point out to folks with ETH is if you remember the London hard fork, which was put into practice last August, ETH rallied 60% going into that. We are now, maybe let's call it 8 weeks from implementation of the merge, but we also have another portion of Ethereum upgrade coming up on the 5th. So it'll be interesting to see what the trade looks like. I think we're going to start getting heavier volumes. Now, another couple traders also mentioned that the pump in the trade on Sunday going into today was also due to non-strong hands, low volume trading. That is very, you know, that can be very susceptible and believable as well. So this is cool. I got to bring this up. This is from ricklatona.eth. I actually know Rick. He's a big degen when it comes to Ethereum. He posted this on his Twitter this morning, and this comes, he basically sets an example for the Panama Canal. You guys should definitely read this tweet. So apologies for my voice, feeling under the weather today. Immediately after the merge, the talk will be around the Prodank sharding upgrade in 2023, which will make L2 transactions cost pennies. ETH will be a net deflationary asset that pays a yield of 8% while providing unparalleled security for all L2s. The thing is that last part of the tweet, number 9, it'll be game over for all alt-layer, all alt L1s. Solana, Cosmos will stick around for a while and finally get crushed in late 23 or 24. Most won't survive 2022. That's his, that's his take on it, and that's a pretty strong take. Now, when it comes to like Solana and Cardano, Doug, what do you think? I mean, what's your opinion of how far ahead Ethereum has on market share to the catch-up that the others are playing?
Well, Solana, I think this was about 9 months ago. They made some big news when I think it was the Jordan brand. And obviously that's been one of the most successful companies out there behind Apple over the last 30 years, right? So you don't want to really bet against the Jordan brand. I think that's Michael's son who's running this NFT platform for them. And they chose Solana, right? So that was a big win for them. And again, I think that speaks volumes. So you can't imagine that, they didn't do tremendous due diligence and going with them. So I think that's certainly a quiver in their pocket that could be huge. And obviously that can literally make or break them, right? If you got the Jordan brand behind them. So again, I think they've got a really good position right there. But ETH, in my opinion, right now for the NFT space, again, if that's where you think the traction is in cryptocurrencies is really the clear winner right now.
It's really going to be hard to take down or even dent Ethereum, because that is where most things have been built on prior to other blockchains. So the everyday person is really used to it. Anybody who's dabbled in the crypto, as far as even going to just MetaMask and doing a swap, knows Ethereum. BNB was a really hot chain for meme coins going back a year ago and a year and a half ago. But the problem with that was only degens knew how to really facilitate any sort of trades on BNB, because the average person was like, what the heck's BNB? I was introduced to Ethereum. And most people don't like change, right? Especially the older you get. So, picking out a new cell phone is a pain in the ass. If you're a degen, you're into ETH and you're into NFTs, definitely go follow Rick Latona.eth. He's over in Paris right now at Paris ETH conference, and I always get a kick of seeing his tweets. Now, the next topic we're going to discuss is very similar to one that we've been discussing over the past few weeks, ever since bankruptcy, and that's Voyager. This topic is going to be based on Celsius. And I really want to talk about this. And these are the ones that hit hard, because these are a lot of members of Trade the Chain or other groups, or just everyday people that watch us or follow on Twitter. But if you've been living under a rock, Celsius filed for bankruptcy. Okay. And here's a very drastic headline on CNBC: 25 billion to 167 million. How a major crypto lender collapsed and dragged many of its investors with them. Now, luckily, I didn't have any assets on Celsius. Doug, I don't know if you did or not. I do have assets on Voyager, so I feel the pain of Celsians and anybody else who's been dragged down into this stuff. But the bankruptcy, a couple of things that are interesting. One is they took the same bankruptcy law firm that Voyager had, and Kirkland & Ellis, and I'm familiar with them. They're one of the top bankruptcy law firms in the world. But it also is going to be interesting to see the parallel of the proceedings as they go down. So Voyager's about, I think, 3 weeks ahead of Celsius at this point. And their first day in court was today, and very similar action was taken as Voyager put forth. And let's see. Well, one, Celsius owes its users around $4.7 billion with a $1.2 billion hole in their balance sheet. So I think at this point, it's a much larger scale than Voyager as far as customers are concerned. This quote couldn't say it better. Leverage is a hell of a drug. That's why we always say to folks who are just getting into trading not to use leverage. Celsius is the third major bankruptcy in the crypto ecosystem to go down. I tweeted 2 weeks ago calling it the Lehman moment of crypto, which I firmly believe it is. But then you also have down here, you have Nick Carter weighing in. And if you guys don't know who Nick Carter is, he's highly regarded influencer on Twitter, known for years as a Bitcoin maxi. And a little controversy a couple of weeks ago when he came out and started speaking of other protocols that were in his investment portfolio. And he very quickly came back to defend the fact that, listen, he's a principal at Castle Island Ventures. And Doug, you and I have had interactions with Castle Island Ventures years ago, going all the way back to 2018. Very well-known, established venture fund out of Massachusetts. And he's a principal there. They have a very broad spectrum of what they invest in. Nick is also very to the point. The yields on the other end, in regards to Celsius, were fake and subsidized. Basically, they were pulling through returns from Ponzi schemes. So very strong language here saying that Celsius operated like a Ponzi scheme, taking new client money and paying off interest on old client money. So we'll see. Unlike Voyager, Doug, I don't feel like there's any impropriety, any mishandling of customer funds. I'm not talking fiduciary mistrades, but I mean theft or Ponzi. What are your thoughts, Doug?
Well, I have a question for you, actually, what you just read earlier. And again, I'm the man on the street, so I'm not the smartest guy in the world. But with that said, you said there's a giant hole in their balance sheet, right? So let's go back to what happened with Celsius. One stakes ETH, right? So you donate ETH to the platform, and then that staked ETH trades with a different price point than regular ETH. So what happened, from what I understand with Celsius, is that people started wanting their ETH back, essentially a run on the bank. And they're like, yeah, but your $1,000 in ETH is not what its current value is in staked ETH, right? That dropped down to like 94 cents on the dollar. So now staked ETH is appreciating. So aren't those imbalances then becoming less? Like, isn't that balance sheet daily improving? So therefore, because we're almost at par, what par means, folks, is that, $100 equals $100, right? So then aren't we getting I don't want to say a healthier company, but isn't in a much better position than it was just 3 days ago?
It's interesting you bring that up. And folks, I just dropped the CNBC article into the chat so you guys could read it. But one of the things, to your point here, and I'll pull it up, Celsius outlines next steps as bankruptcy proceedings begin. Now, one of the reasons, wrong article. One of the things that was, to your point, was its investment into SD ETH, the staked ETH. Of course, I can't find it. So, all right, this show
Live
sucks.
TV.
One of the things that was brought up was the fact that the parity is, it's coming closer and closer together. And one of the things that people supported or not support, I don't know what the right word is, with 3AC is that if they just had more time, their long trade could possibly have paid off. It was literally an accelerated time decay of the trade, right? So what they were betting on was the parity to be on par with each other, buying at a discount, par trade, and that's slowly coming together. So a lot of analysts said, wow, this would never have happened if we were 3 months were taken out of this time cycle. What happened was their trade decayed quicker than it materialized, but they were on a certain track.
I'm curious, Alex, I haven't checked the sell token. Is that then appreciating with this narrowing? If you can go to the trade the chain dashboards, live television, I'm wondering if that's gone up because the stake ETH has moved up in the last day or two. It's gone from like 94 to 98. So just wondering.
Well, it has. It has moved up. Sell. I mean, obviously, we could see back in June 14th here. June 12th here, when crap was really hitting the fan at 14 cents. We saw that sell short squeeze, basically, which was a Twitter pump, go up to $1.54, and now we're at 79, 78 cents. What happened was just here, we were at 42 cents on the 13th. And now that we've had this rise, we're up to 78 cents. So you're almost 100%.
What you and I said too, that these markets are just amazing. If you didn't participate in them, you would have thought that with all these bankruptcies and challenges, that these cryptos, Bitcoin and ETH, would have been so much lower, right? 1,000 each. I mean, 1,000 for BTC, maybe, $100 for ETH. And you look at really what's happened with these companies, like BTC, I think was 37K when the Luna crash happened. I think that was mid-May. I mean, look at it now. It's only down maybe 15,000 from that price point. And even Celsius, right? It has a value of 78 cents. I mean, you would think a company that's in bankruptcy proceedings would be not even a penny at this point. So these markets are dumbfounding.
First of all, the markets are rational. Okay. And you always got to think right when you think you figured it out, and you look and you see people on Twitter saying, hey, hold strong or wait for the bottom or we're going down, the trading influencers. Whatever makes sense can go into your head and you say, oh my gosh, this is absolutely true. Look at this chart. Look at these signals we're getting. But the market's irrational. One was the sell token price action right here was irrational. Two, I don't want to bring it up too much because of the Teenage Mutant Ninja Turtle pump and dump teenagers on Twitter right now. We all know who that account is. But we have Voyager, right? So Voyager took its steady decline, just like Celsius, and then boom, last week went up to over $1 and is now stabilized pretty much in the 37 to 40 cent range. Why is that? Someone tried to pump it. Now, what I'm curious about is why didn't the prices sell after and let's call it for what it is, it's pump, no short squeeze, didn't drop down to its previous value, being the company was in a similar state. Not only that, but the token doesn't equal to anything to equity shares in the company. So a platform token is only good within the platform that it resides on. Same with the Voyager token. Voyager pumps from a pump and dump scheme and then consolidates to the 38 cent range. Well, why didn't it go down to 12, 13, 14 cents? Any rationale for that?
Well, you're saying so 5 o'clock, I don't have to wait for anything today then? Nothing at 5? I'll cancel that. I'll cancel that that appointment I had in front of my computer. Okay.
Don't get us in trouble. I mean, the emotional state of people right now is ridiculous. Yeah. There's really Phoenix in the comments, T minus 1 hour, 34 minutes. There's really nothing to do but just call, put shade over this or make jokes to make yourself feel better because most people have their VGX on the platform locked up. Anyway, also here is the filing for today's court. I'm going to drop this in the chat too as well so folks can read if you have missed it. This is Celsius's presentation. It's an interesting presentation. Read through it when you get. I mean, obviously, you'll see where the asset snapshot is. I know Simon Dixon from Bank to the Future for weeks trying to get a hold of, Alex Mashinsky and co. in order to put something together like he'd previously done with Bitfinex. But there was no transparency being sent over. Well, guess what? Now there's transparency. Here's the snapshot of the company's financial health. Also, these are important. The key legal questions. Read through these. I also want to go back to what they're proposing real quick. The insolvent crypto lender has said that it'll give customers an option of staying long crypto or receiving a discounted cash settlement. Now, I got to ask you, as the everyday guy in the street, Doug, maybe you have 5,000 in there, maybe 10,000, maybe 15,000 in there. Maybe you pawned off your wife's, wedding ring. I don't know, to get cash in there to get that yield. But what would you do? Not financial advice. What would you do as the everyday guy?
Well, the crypto then stays with them, right? Correct? You're obviously, so, I mean, if you think it's a generational bottom, right? Forgetting about their solvency and whatnot. But if you think it's a generational bottom in crypto right now, and we are going into this next bull market run, you probably would take the cryptocurrency, right? And hold on to that. But if you have zero faith in this entire ecosystem and you don't think any of these companies will make it, especially them, and their story actually sounds a little bit healthier than it did a couple weeks ago, then you would probably, if you don't believe in that story, then you would probably take the cash, right? So,
well, I mean, here's the thing: stay long crypto. If you're in HODL mode, and that's what let's say, for instance, I have certain bags that I'm not going to touch. They're going to go with me through life. But the stay long crypto option pertains to leaving it on the platform.
Right. Yeah.
And so then you're saying, okay, I have belief that as a going concern, this company's going to pull out of Chapter 11 in a reorg, and I'll have my crypto intact and not lose any value in it. The other one is receiving a discounted cash settlement. Now, here's what I'm saying. You brought it up, generational wealth bottom right now. Now, you and I have been through a bunch of crypto cycles. We know when the time to DCA, when for our long-term investments are times like this. And with each one, the reward is greater on the other side. Just like with every collapse, the collapse is greater, So depending on what that discount is, I don't know. If it's 10%, if it's 15%, I may snag that up to get into assets I want. I'm upset, because I have locked up assets on a platform, and I'm not upset because they're locked up per se. I'm upset because it's preventing me from buying the dip. I mean, I hate to use the word and sound like, every other person on Twitter, but now is the time to be analyzing your investments for the next bull run.
Well, the unknown with all these companies is too, is who is the leadership team, or what does that look like going forward, right? So are Ehrlich and Mashinsky respectively, are they cut off from these going forward, right? And is it new team put in? Obviously there's a board there, so they'll have their say. So yeah, what do these firms look like? We know what the technology looks like. That won't change. Obviously, how they do business will change, but then also who's in charge, that will change probably as well.
No, you're absolutely right. And going back to this presentation that they have, you'll also be able to update yourself on the current status of operation. So this was interesting. I didn't know all the particulars in what was open or closed, but this one will show it to you right here and what's going on, what's happening right now. And then the proactive steps. So these are proactive steps and safeguards. One interesting thing to note, nearly all Celsius assets are stored on Fireblocks. You and I know Fireblocks awesome. Decently. Yeah, we've known for years, since they started pretty much. And one of the securest custody systems in the marketplace. This one is interesting. Celsius is no longer relying on an intermediary to hold the keys to its crypto assets. I don't know exactly what that means. Are they holding on to them themselves? I don't know. Listen, the bottom line is, I had here's Mashinsky on my show from April of 2020. I've had him on, to go over the Celsius network to explain what it is. Mistakes have been made in the lending arena. Lending is a everyday matter. It's business. You just have to do it like everything else, which is responsibly. But here we are now. So moving forward, Doug, do you actually think any of these companies have a chance for emergence from Chapter 11? If you had to just take a guess.
I really wouldn't want to speculate because some of these people's lives are, relying obviously on this, right? And there's a lot of pain out there, and we're sensitive to that. So Celsius does sound promising. Hopefully, if they do find the right footprint and roadmap, working with the bankruptcy proceedings and the attorneys, then hopefully Voyager then can follow that. The question right now is time. How long does this all take, right? And in the meantime, people actually do own ETH and BTC, and these markets are moving up, and they want to sell their positions, right? Some of these people may actually be in the money. So I think it's frustrating, obviously. But so right now we're all like in the same mode, right? Which is wait. I will say this lastly, the news cycle has slowed down. There really isn't that much bad news, and the market's really enjoying that. So maybe that is talking about that generational bottom. Maybe all the bad news is out at this point, right? We won't know for another couple months, but we've certainly absorbed a hell of a lot in the last literally 60 days since July 15th. So
yeah, it could be priced in at this point. Again, who knows? I mean, we're still, from a trading perspective, we're still cognizant of the fact that we have two outcomes that are very possible. One is, and I thought we were going to sustain it, Bitcoin above 22.5, which would then make me into a bullish short-term pump to 27, 28. That's how I personally felt, but it didn't hold there. I also feel that, the other way it swings, going through that pendulum between 21 and 19, that if it ever went below 19, again, we might see that proverbial bottom around 16, 17,000 and bounce off of that. Who knows? Again, irrational. Don't know really what to say except, the worst monsters are real. Did you notice that on my new coffee mug?
I did as well.
Listen, we're going to end this with this. It sounds like both companies have immediate plans for people's funds, and that's what's important. Mine included, Doug's included. We both have money stuck on some of these platforms we're talking about. Celsius is looking for either proposing for a long-term go long on your crypto that's already in there, or take a haircut on getting cash out. Voyager, I know, is petitioned to let the USD out from all accounts ASAP after an accounting and forensic study is done by their accounting firm. So there is hope on the horizon. Hopefully we are close to near bottoms. I want to be a bull, not a bear. What do you want to be, Doug?
I want to be a bull, Alex.
All right. Folks, thanks for joining us. Hold on to your handlebars. We'll be back tomorrow with Nick Mancini to go into some TA for you. Thanks, folks.